I'm going to go ahead and start the recording too. Um, I am a managing consultant for SBC Business, Small Business Bookkeeping and Consulting, and we are working in conjunction with the SBDC in Nevada to present this workshop for you today. Okay, so we'll get started. So today our workshop goals are, by the end of our presentation today, that you all feel have some more confidence and understanding, first of all, the difference between business credit and personal credit. There is a little bit of a difference. That you're able to access your credit report and also read it and understand the different parts of it. Understand what kinds of things you can look at on your credit report, and what might be able to be disputed, or what to do if you don't have some things that you can dispute. Create an action plan to move your credit to where you want it to go and the steps to do that. Have a little better understanding of how lenders evaluate credit and financial strength. And like I said, we'll also walk through what you can do to create a plan as well. So why does credit matter for small business owners? We all think of credit impacting our ability to get business credit cards or personal credit cards, business loans, of course, that's a big one, and other things related to funding. But it also can impact your interest rate and borrowing costs for that funding. Sometimes it can impact business insurance premiums, how you set up your vendor payments, that can be impactful for that, and even some commercial leasing opportunities, obviously that would impact. So it's important to know what your credit is, where you're at, and what you can do to improve it if necessary. Something to consider, a borrower that has perhaps a 580 credit score will likely pay significantly more over the life of the loan than a borrower with a 720 score. So not only is it about getting the loan, it's also about the cost, how much it's going to cost you overall. So good credit can improve access to capital, and it also can reduce borrowing costs, as well as these other things like ability to get leases, vendor payments, etc. So there are two types of credits that we need to consider here: your personal credit and your business credit. Your personal credit is going to be linked to your social security number. It is used by many lenders when evaluating small business owners. So when we think of, well, I have business credit, they're not going to look at me, they look at you also. It's important to note that on a personal level. Your personal credit then reflects your personal borrowing and your repayment history. Where business credit is linked to your EIN, so your business information. It tracks your business payment history, and it's always helpful to separate your business and your personal finances, to keep that separate so that you have a very clear line and understanding of what those two are. But remember that most small business lenders will look at both your personal and your business credit if you have business credit established. So what do we do? How do we find this information? If you haven't already looked at your your credit report, you can access that at a place called annualcreditreport.com. Now that's one of many, but this one is free. It is something that brings together your reports from Equifax, Experian, and TransUnion. And sorry, I'm going to admit this person too. There we go. It allows you to review all three bureaus, and you will find probably as you're looking that the information can differ from bureau to bureau. So it's important to have all three of them so you can look and compare and contrast. Credit report versus credit score. So oftentimes we hear people kind of think of that as the same thing. But what I want you to remember is it is two separate things. It just happens to be often located in the same place. But your credit report is the detailed history of your borrowing, of what you borrowed, how you repay, etc. Your credit score is the number associated with it. So one way to think of it is your credit report as your report card, and your credit score is your overall grade. Of course, that overall grade can change over time depending on the different components of your payment history and utilization and things like that, which we're going to get into here in just a moment. Credit score models, they tend to range between 300 and 850, with 850 being a stellar score. There are different scoring programs. So your FICO is used by most lenders. Your VantageScore is often used by banks and credit monitoring services. There are 5 factors that go into your credit score. The first 2, the top 2, are your payment history, which makes up 35% of your score, and your credit utilization, which makes up 30%. So payment history is obviously you're paying your payments on time, you're consistent in doing that. That's the biggest part of your score. Your credit utilization is the percentage of available credit that you're currently using. That makes up 30% of your score. And then the 3 smaller components are going to be your the length of credit history you have, as well as the mixture of credit that you have on your credit report, and then any new credit inquiries. We hear that soft and hard pulls. That's where that 10% comes in. So when we talk about credit payment, we understand that that's our consistently paying our payments on time as they are prescribed. Your credit utilization, as I mentioned in the last slide, is the percentage of available credit that you have out or that you are using. So our goal is to have that number at 30% or below. Obviously, the lower the better. So when we think of a credit card limit that has a $10,000 credit limit, if you are using 3,000 of that, you're at that 30% threshold. So you're in good shape with our goal to get it a little bit lower. If you're using 1,000 of that 10,000, you're at a 10% utilization. The goal, like I said, is to get to 30% or below. Oftentimes we find ourselves much, much, much higher. So that is something that you can tackle quickly. Well, you can make a plan to tackle your utilization to start so the utilization going down and your credit score going up. The lower utilization signals responsible credit management and does influence your credit scores. Okay, so some common credit myths that we hear quite a bit. Checking your own score will not affect your credit score. It's not going to lower it. You're allowed to check it. These are just considered soft inquiries when you're looking at your own credit score using a monitoring system or even pulling your report like we just talked about. That is something that you are able to do, and it should not have any impact, and it will not have any impact on your score. Another myth, closing old credit cards always helps. That actually doesn't help. If you're able to leave a credit card open with, zero balance or whatever the case may be, the lower the better. The longer you leave that open, the better, because it extends your credit history. Remember, I believe that is 10% of your overall credit score. So go ahead and pay those credit cards off, but leave them open and just don't touch them. Perhaps, we always said in the olden days, we would just put them in ice cube and stick them in the freezer so we don't use them. That's an option. Do that and then just leave it open on your credit report so it continues to allow your credit history to get longer and longer. And then another myth, and this is an unfortunate one, paying off a collection automatically removes it. Unfortunately, it doesn't. I encourage you to pay the collection off. That's important. But you will need to have conversations with the people that you're paying off and ask for them to see if they are willing to take it off. Sometimes they are, sometimes they're not. Sometimes it's just going to be something that's going to sit there and show that you paid it off, so you're responsible in that manner, but the collection will stay there for a while. And it's just something that you'll have to have a conversation with your potential lenders and explain the circumstances. So when you pull your credit report, for those of you that may not have seen one before, it always has different sections that you will read through. So your first section is going to be personal identifying information. When you have your credit report in front of you, make sure that all the information is correct. It is you, your name is spelled correctly, your address is correct. Your social security number is correct. Sometimes that can be an issue, and then that certainly needs to be addressed. So all personal information is correct. Then it's going to go into account history. So it's going to have sections, blocks of each of the different credit that you have outstanding, whether it be loans, car loans, mortgages, credit cards, sometimes medical debt, any kind of installment loan at all. You should see all of them listed. In each of those blocks, you're going to see your payment activity. It usually is little blocks with X's and check marks. So obviously green check marks mean you're paying each of those months that it's representing on time. And if you have X's, then that's going to show that you may have been late or missed a payment. That will help you. It gives you a nice visual of where you are from a payment history perspective. It also will show your credit limits and balances, so you can see your utilization rate there. If there are any collections or charge-offs, you're going to see those as well, or if there are any public records, if that is applicable, you'll see that as well. Charge-offs, just so you know, a charge-off, if you see that on your credit report, it is when a creditor classifies a debt as a loss. So they did not get payment for that, and they just charge it off, took it as a loss, but that does affect you in the long run if that is on your credit report. I always suggest after you have your credit report in front of you, you've gone through all of the sections, you've determined accuracy, that you create a tracking system. If your goal is to improve credit, and really just to monitor credit, make sure that you know what's on there and ensure that there isn't anything inaccurate, or as new things come in, that those are in fact credit that you have asked for and that you are utilizing. So when you're doing that, it's always good to have some kind of a tracking system in place, especially if you're trying to improve upon, because then you can know what you did what your last action was for that particular credit, and you can continue to make notes and know where you're at. So creating a tracking system can be as simple as a notebook with the creditor, what the circumstances, if there's something that you need to address, whether it be a discrepancy or another dispute kind of issue that we're going to talk about here in a little bit, you can talk about what that would be, what your action was, the date that you took that action, who you may have spoken to, etc. It's nice to have all that in one place. People also do this with spreadsheets. If you like spreadsheets, Google Sheets or Excel, that's a great option as well. So whatever system works best for you. There's no right or wrong answer. The right answer, though, is to make sure that you do have something in place so that you can keep track of who you spoke with and what you're doing with each potential concern on your credit report. Because good documentation is always going to help the process as you're moving forward. So in the event you find something on your report that is not correct, there's a credit on there that you did not take. There's something is wrong with the balance, something that is truly not true. You do have the option and the opportunity, and I encourage you to put a dispute in for that particular issue with the different bureaus. So if you have your annual report, for instance, that I referenced earlier, you'd have all three bureaus. You have the opportunity, if you find this discrepancy on all three, to actually dispute the concern on each of the bureau's websites. That's an option, and I encourage you to do that. It's a formal request that you're asking someone to review or correct inaccurate or incomplete information on your credit report. That in and of itself could have a huge boost in your score if it is something that is actually causing you harm. But please remember, you only dispute if it is in fact inaccurate, incomplete, or unverifiable. There are other things that we can do if you find that there is something negative, but it's true. That's a different category. But this, for disputes, just remember, it's always if it is in fact inaccurate information that you need someone to take a look at and change for you. So back to what I just said a few minutes ago, sometimes we do see things on reports that is accurate and it is true, but maybe there's a reason for it. So let's say you had a period of time that you see that you had several late payments in a row or missed payments in a row around the same time frame, and you look back in your memory and you remember, oh my gosh, that is when I was out of work, or that is when this particular thing was happening in my life, and I can see that I've rebounded from that time, but those negative things may be pulling my actual credit down. You can, at that point, for things that are isolated and that you've showed improvement, you can request goodwill adjustments. So basically what you would do for that is you're reaching out to whomever that creditor is reporting that negative activity to, and you're almost throwing yourselves on their mercy and saying, during this month to this month, you can see that I had some issues paying. The reason was I was out of work. I can provide documentation to show that. You can see that I have rebounded and I have been able to pay since then very consistently. Can you please make a note or help me to improve what you're seeing on that credit report that shows that I'm doing better? Can you please remove that and help me for that? It is entirely up to the creditor's discretion to allow that to happen, but it does happen. So it is worth taking the time to send that written request to them, which you can usually find their information for that on your credit report, but if not, you can always Google it, and you would just be Googling that particular creditor in their dispute goodwill request. There's usually a different email or a different phone number for those things. So that's where you would look. But you can certainly do that. Now, the follow-up for that is about every 30 days, check in and see if anything's changed on your report and reach back out to them. Once you've sent something written, and oftentimes, if I didn't mention, you can email them too, depends on the company. Once something's been written, you can follow up with phone calls. Just make sure you're tracking who you spoke to and what you're finding out. It can be a process, but in the end, if they opt to help you with that, it can also help to boost your score pretty quickly. So something to think about and something to look into when you're looking at your reports. Medical hardship is kind of the same, in the same vein. The difference would be for a medical hardship, you may show that, between this month and this month, I had surgery, or I had an illness that caused me to not be able to work, and thus I wasn't able to pay my bills. So you're doing the same thing. You're requesting that they take a look and use your information that you're providing them to make a change on your report. Again, it's completely up to them. They often may ask for medical documentation and why you had reduced income. So if you are planning on doing this, make sure you do have documentation in the wings to provide them if they ask for it. So when we're thinking of the two different things that we just mentioned, a standard dispute means this information is incorrect and I'm asking you to please change it. It is wrong. Where a goodwill or medical hardship request is the information is correct and I know it's correct, but I had extenuating circumstances and I'm asking for help in this way. So after you've looked through your reports, you've determined if there's any inaccuracies and you've created those disputes. You've determined if there's any medical hardship or goodwill hardship that you could request. And now you're sitting there and you still have some negative things there that there's just doesn't fall into those categories above. If it's accurate, now it's time to figure out, well, what can we do? What's our action to make things better? So you're going to focus on improving your payment consistency, lowering your outstanding balances to get the credit utilization down, limit or don't do any new credit applications that are going to require hard pulls, and then use structured debt repayment strategies. So go back in your mind's eye and remember those 5 categories: the payment history, utilization, credit mix, hard inquiries, and fifth one that's just escaped me. And make sure that you are following or that you're taking care of those 5 categories when you're looking at your credit report. So if repayment is where we're at, it is time to start getting those balances down. There are 2 methods that are often used or popular possibilities that you might want to apply to your situation. The first is the debt snowball method. And basically the snowball method, you look at a list of your creditors and how much you owe. Let's just talk about credit cards right now. So you have a list of credit cards that you owe. You take a look at all of the balances, list them in order of smallest to largest, and you start to tackle the smallest balance first. So you decide how much I'm going to pay each month on my credit payments. Obviously, it's going to be at the very least the minimum amount. So you want to make sure you're paying all of your minimums, and then that smallest balance you're going to take extra money and throw towards that until it is completely down to zero, and then you'll go to the next smallest balance, et cetera, until you start to see your balances going away to zero. This method is good for people who want to see accounts paid off quickly. You want to start seeing that zero balance, seeing that credit utilization go down. This is the best way to do that. The second method would be for someone who wants to attack the high interest first. So same concept, list your credit cards out, how much you owe on each, but make sure you include the interest, and then attack the highest interest card first. So pay all the minimums on time. Anything extra goes towards your highest interest. This is going to be best for people who are focused on minimizing interest costs and maximizing financial efficiency. So basically, you're, in theory, paying less over time because you're paying less interest because you're taking care of those quicker. If you do have collections and charge-offs that you see on your report, it is important to address those, even though it's not the funnest thing to do, and I am the first to admit that. But reaching out to those creditors that have put something negative because they've had to put you into collections or charge-offs, reaching out to them, negotiating settlements, setting up payment plans, asking for account resolution. It is good to have those conversations. Keep track of it on your tracking sheet. See what you can do, even if you just take one at a time. Don't feel like you have to do everything at once, but take one at a time, resolve that issue, and then go to anything else that you might find on there. It is going to help your credit in the long run. So remember that this is a process. This improving credit is a process that takes some time. So don't feel like you're having to do everything at once. Just take deep breaths and do one at a time so that you can start to see that improvement over time. Setting up credit monitoring is also a good idea. So and there's lots of services out there. The one that comes to mind is Credit Karma. You can set that up. They will monitor your credit. They will give you notifications if something changes. They will also let you know when good things happen, as your utilization is coming down and your payments history is improving and getting better and better. It is good to have this to peek in on every now and again. Don't feel like you have to look at it every minute or every day, but just monitoring where things are, making sure that nothing is inaccurate. This is one easy way that you can get that information, and also will let you know if there's a hard inquiry. Certainly, you want to make sure that that's something that you've done. So just again, for keeping track of where you're at, setting up these monitoring systems are a good idea. In addition to Credit Karma, most credit cards and banks offer the service now. So you could probably do it through any one of the accounts that you have. And along that same idea is the technology automation. So credit monitoring that we just talked about, setting calendar reminders. It seems silly probably, but just having something remind you, hey, I owe money today. I need to pay this bill today. Another good thing for calendar reminders or task management is setting an appointment with yourself as a personal credit holder and a business owner credit holder that you're going to look at it each month. You're going to check in on your tracking sheet, see what you need to address, take a look at where your credit is, make an appointment, keep it with yourself, and then don't worry about it when you don't have that appointment. Don't let it be something that's on your mind all the time. Just tell yourself, I know I have an appointment on my calendar for the 20th. I'm going to sit down, give myself an hour to really look at this, so I'm not going to worry about it in the meantime. That's where automation and technology comes into place. There are also some credit rebuilding tools out there. So if you have gotten yourself in a situation where you've got utilization paid down, your payment history is getting better and better, there are options out there that you can utilize to rebuild as in addition to what you're already doing. So there are secured credit cards and credit building loans. Basically, the way those are set up is the same way, just depending on whether you're using a credit card or a loan. But you deposit whatever the required amount is. Maybe it's a $500. We'll go with that. So you deposit $500 into the account of the loan or secured credit card. Then you use the credit card or loan money as you would for anything else, but you make sure that you are paying off that money that you basically have loaned to yourself every month on time as prescribed. And then that company will report on your behalf to your credit report, which will cause your scores to go up. So that's one way that you can kind of control that situation. Just make sure you're always paying on time. After a certain amount of months have passed, and that is, you determine that at the beginning of the program, then that money that you deposited will be returned back to you, and hopefully your credit is improved and you'll be able to do something more unsecured. Another option out there is called Experian Boost. It's not available everywhere or for everything, but it is available. So in the event that you have, well, I think we all do, right, where you are paying maybe rent or a phone bill or some utility bills that aren't just naturally and typically reporting to your credit, but you're paying them every month. Experian Boost or other programs like Experian Boost will allow you to list those different monthly bills and obligations that we pay, and they will report to the credit bureaus on your behalf based on those. So that again is can be another increase to your credit by just doing those simple things. I will say that I have done that myself for a few things, and I have seen some differences. They are definitely reporting, it definitely works. But again, it just depends on the state you're in, and it also depends on the different creditors that you're paying each month. Okay, so credit changes are not instant, unfortunately, and certainly we wish they would be, but they're not. So the good news is we have kind of a little timetable to remember. So if you're doing corrections for reporting errors or reduced balances, typically you're going to start seeing differences in your scores and reports between about 30 and 45 days. Getting you're lowering your utilization and your consistent on-time payments. It typically takes about 2 to 3 months to see a change. And then having those positive patterns, payment patterns, improved credit mix show a difference. Consistently after 6 to 12 months, you're going to start seeing those differences. Obviously, addressing inaccuracy and lowering utilization are usually going to be what you see the quickest of an improvement in your scores as you're going through those processes. And I think it's important, so I always add this slide. It's important to celebrate your progress. This can be a grueling situation. It's not always fun, and it takes a lot of effort and consistency and behavior modification, so to speak, to see a result. So celebrate that progress. Give yourself the grace. I'm reducing balances. I'm seeing score improvements. I'm resolving issues. Every small improvement you make is going to make a meaningful long-term result in your scores. Okay, so that was personal. So now let's talk a little bit about business credit. So obviously when we first start a business, we don't have business credit established yet. So what do we do to make that happen? First and foremost, and this, if depending on where you are in the business process, you may have already done these things. You want to establish a professional business presence, obviously with business address, phone number, website if you're able, email. It just shows that you're a legitimate professional business that deserves being recognized as such. Having an EIN number, again, if you're already in business, I'm sure you've already done that, but having an EIN number through the IRS website, it's that kind of your business social security number. That's an important thing to have established. In the event that I have anybody on the call that hasn't done that, but you are planning to get an EIN number, please remember a little side note, EIN numbers are free. You do not need to pay for them. So make sure you're on the IRS website when you request it. If someone is asking you for money, you're not on the right site, and likely they'll take your money and then they'll go to the free site and they'll get your EIN for you. So just a little side note, EIN numbers are free, so don't pay for those. Setting up a business bank account is important for business credit. It's also just important for basic business accounting. So if you haven't already, when you are able to separate your personal monies from your business monies, the sooner you're able to do that, the better. It just helps in all aspects of business, but also from a business credit standpoint. In the event that once you've been in business for a bit and you're able to get a business credit card, obviously they're going to look at your personal credit to do that, but having one in the business name, buying business needed items with that card, paying it off every month is going to help boost your business credit card or your business credit score. And also going to Duns and Bradstreet and getting a Duns number. That's a unique identifier that's used to track business credit activity. That's something that you can do at any point, and get that set up. And then that's another monitoring that's being done for your business credit. So the roadmap for building a business credit: legal business entity, your EIN, bank account, DUNS number, and then establishing vendor trade lines that report payment history. We'll talk about here in a minute, but if you have businesses that you work with that you are buying items for your business on credit, and you have several opportunities there are different vendor possibilities. One thing may be a differentiator is to have the conversation, say, do you report to credit bureaus? Not all vendors do, but some do. So if apples to apples are pretty close on a vendor, but one does report to credit bureaus, that might not be a bad one to go with. So that's an idea. And of course, obtaining the business credit card like we talked about, and making sure you're monitoring your business credit reports. So steps to strengthen your report: register reporting agencies, which would be the Duns and Bradstreet, open up the vendor accounts, obviously pay your vendors on time, monitoring your credit reports. And you can go to Duns and Bradstreet, which I mentioned, Experian Business, and Equifax Business to set up those monitoring accounts. Some vendors, as I mentioned, not all report to credit bureaus. As of the time that I was doing this research, these 4 we do know do. So if you're getting office supplies through Uline, Granger, Quill, Sumo Office Supplies, those typically do report to credit bureaus. But it's important to note that vendors that policy changes. So check in with your vendors from time to time. Perhaps you have some vendors that didn't report to credit bureaus, and maybe they are now, or vice versa. So just check in with them as you're ordering and see where they stand with that. You're going to have to pay those bills anyway, so it'd be nice if they can report and help boost your score. So SBA lending, obviously that was one of the top things that we talked about of why we think of credit when we are personal or business owners, small business owners, because we're hoping that at some point we might need to get funding to grow our business, to buy more equipment, for working capital, whatever the case may be. So when we're talking about SBA lending, things have changed just a little bit, not a lot, but a little bit as to how they evaluate business credit or for lending purposes. So although the credit score is still extremely important, it is not the whole thing that they're looking at. They're also looking, like we mentioned, at personal credit. They're looking at cash flow, banking activity. They're looking at your banking history as a business owner. They're going to look at financial statements. So if you already have a business in place, they're going to want to see your balance sheet, your profit and loss, your cash flow statements. If this is something that you're hoping to get credit for a business that you're ready to launch, that's where financial projections are coming in with your business plan. They're going to look at those things and see if you have already made or are projecting to make enough money to pay whatever loan that they're asking you to, or that you're asking for. They are going to look at an industry experience. They want to know how long you've been in business. Do you have management experience in this industry, or is this something brand new to you? What is your ability to actually repay the debt that you're asking for? And having a strong business plan. Anytime you look for SBA lending, not anytime, but I'm going to say most times, they are going to ask for a business plan, a strong business plan with financial projections for at least 3 years, sometimes 5 years. So something to consider as you're building as you're working towards SBA lending, that these are things that they're going to look at. Strong credit score is always important, but lenders are looking at the overall financial strength of the business. Credit will open the door. Cash flow and repayment ability is what will secure approval. When or if the time comes that you're going to start looking at potential lending, it's important that you do a little vetting of your own. So different SBA loans are given or processed through different financial institutions, major banks, credit unions, CDFIs, different kinds of lending institutions, and different lenders have different criteria. SBA lending, there is a basic thing or basic rules that they need to apply, but also they may be looking at different things as well. So just some general information. Major banks are often looking at the credit reports and financial statements. Credit unions are going to have a greater emphasis on relationships and their ability to repay. Not that they're not all doing that, but this is like a focus. And then alternative lenders like CDFIs, they're going to look at cash flow, business activity, and business credit. The reason I bring this up to you is I always suggest to my clients that they have conversation with different potential lenders before they make the decision to start applying. It is okay to gather information. It is okay to go to the bank that you have your business account through and talk to their business lending group and ask questions of them. And then maybe pick two more other possible lenders and ask information from them too. So you can truly evaluate the different pros and cons of each of these lenders before you decide to move forward. So some things too that might be red flags, some obvious ones. If someone tells you, or a program or organization tells you, credit repair, it's guaranteed. You do this, this, and this, and we're going to help you, and it's all guaranteed. If it's too good to be true, it probably is. So make sure you're doing a lot of vetting before you ask for different credit improvement agencies to help. Instant score increases claims also probably too good to be true. We've already established in this presentation it takes some time. We should anticipate it's going to take some time. And then if you're paying upfront fees for help and you're not getting written agreements, that's probably a red flag as well. Make sure that whomever you're working with, if you choose to go that route, that you have all of your T's crossed and all of your I's dotted, and make sure that you're working with a reputable company that truly is there to help you. Also, best practices, as we mentioned, never dispute accurate information. If you see information on your credit report that you know is true, don't put a dispute in for it. You might be able to do other things like the goodwill request or the medical hardship request, but if it's accurate, do not dispute it. It's just going to create more headaches for you in the long run. Avoid excessive credit applications. If you're trying to get your credit score in a better place, just don't apply for credit right now. Just wait on that so that you can keep that score where it needs to be. Avoid late payments at all costs. Just if all you can do is pay the minimum, make sure you're paying the minimum on time. And stay in contact with those creditors. Have those conversations. Give them a call. See how they can help. Oftentimes they will. So it's worth picking up the phone, having those uncomfortable conversations, and seeing what you can do to help yourself. Resources that are good to look at through this process. Annual credit report we've already spoken about. SBA.gov has some great information about business credit. Dun & Bradstreet, as mentioned, and also the Consumer Finance group, resource group at consumerfinance.gov also has some great information. So what do we do now? We've looked at our credit reports. Have a better understanding of what lenders are looking for, etc. So in the next 90 days, just a possible action for you. During the first month, just get your reports and review them. Identify any inaccuracies. Month 2 maybe will be when you start tackling the utilization that you have, or addressing any outstanding issues that you may have found during your review. Month 3, start working very diligently on positive payment history and monitoring your progress. Your goal is to create sustainable credit improvement habits. Progress is often, unfortunately, in this game measured in months, not days. So just know it's going to take some time and you're going to do great. And you're just going to keep at it and be consistent. If you want something to do this week, you could just pull your report, set up some monitoring, find some potential inaccuracies, contact one creditor if you need to, and reduce one balance if you can possibly do that. Just take the action, even if it's just what seems like little things, because little things build. I mean, 8 months from now, it's going to come and go, whether you do these things or not. So if in 8 months from now you can see some improvement, it's worth taking the steps. And the SSBCI technical assistance through the SBDC Nevada group is something that we can do on a more personal, rather than this workshop way, but actually have a personal conversation with you. You can receive that one-on-one support at no cost to you through this program by going to using the QR code and registering for time with a consultant. We can create information based on the credit reports that you can provide, help you with the individual action plan, help you with drafting letters to creditors, if that makes sense, and other options. So if that is something you're interested in, we would love to be able to have time to work with you. So please use the QR code and go ahead and get signed up, and we will get you attached to a consultant once that time comes. So that is the end of the presentation. What about questions? Does anybody have any questions? Yes, Joy.
Sorry, the chat is disabled, so I couldn't just type it
Oh,
in.
okay. That's okay.
Was just curious if, because I missed the beginning of the presentation, will we receive a copy of this?
Yes, you will.
Okay, wonderful.
Yeah,
Thank you so
you
much.
will. Yeah, no problem. You're
And
on mute.
Joy, just so you know, Joy, the presentation will be sent to the Nevada SBDC group. So you'll want to reach out to them directly. I usually get all the stuff processed within a week or so. So maybe late next week, I will try to get that to them, and then they'll be able to give you the link for this presentation along with the presentation itself. So just let you know.
Okay, perfect. Thanks, Karen.
Yep, no problem.
Absolutely, James. Thanks for coming. Right. If no one has any other questions, I just want to thank you all so much for coming. Do go ahead and sign up for possible consulting services. We're here to help. We're excited to help, and there's lots of things that we can help with as it relates to credit, but then other, financial questions and things like that as well. So thank you all so much. We'll give you some time back on your day, and have a wonderful one. Take care.